Hey, how y'all doing? So in this video, we're going to be going over this Euro USD trade. But first things first, before we get into the trade review, I want to remind you guys that coming July 1st, I am opening up my mentorship for the 1% Club. So for any of you guys that wanted to get that mentorship, you wanted that extra help, you wanted more help with your psychology, risk management, whatever it is, we're going to be covering it in the 1% Club in depth. Okay. So if you want to reserve your spot, because I'm keeping it max 100 people, anything over 100, it would just be too much. I'm not going to be able to handle over 100. I want to keep it fairly small because the learning experience is better. So if you want to go ahead, reserve your spot, I think we got like 35 people in there at the moment. So again, cutting it off at 100. 100 is getting cut off, and once I do open it, you'll get access to all these different channels within Discord that are locked channels. See this? It may change a bit because I'm still working on it, but that's what you can expect. Okie dokie. So I'll leave a link to it. I'll leave a link to the waiting list in the description of this video. Okay. So now to the review. Let's break it down. So Euro USD. So I'll plug this in my free Discord chat the other day as well, like I always do. The level, the higher time frame. Well, actually, first let's start from the daily chart. So daily chart, you can see Euro USD. This thing is clearly bearish. It's clearly operating within a bearish market structure. Why do I say it's clearly operating within a bearish market structure? Well, you see right here is where we had that shift. We broke that swing low, and then we put in a swing high level. Boom. At that point, we're 100% confirmed. This thing is operating within a bearish market structure. Okay. So we're trading with the tide. We're only looking for shorts if we're with this particular strategy, that is. And so on the 4-hour charts where we had that higher time frame level. So right here, you can see we have what is called a bearish order block, and it's a high probability bearish order block as well. So a high probability bearish order block right there. Okay. So you can see, what did price do? Price traded up into a premium marketplace. Premium being above 50% of that price range. So we traded up into a premium. Premium means expensive. Tested a higher time frame level in a premium. You can see it kind of after doing so, it basically consolidated for a bit, accumulated a bit, and later on we ended up getting that lower time frame displacement. All right, so let all that crap do what it wanted to do, all that consolidation, all that garbage, and this is where I ended up hitting it. So we had this displacement this morning, or not this morning, but yesterday morning, Tuesday, right here. See this big leg lower? See that big leg lower? That is a displacement to the downside, okay? And on that displacement to the downside, we had something created. What was created? A fair value gap. That's our confirmation signal. Okay, we want to see that fair value gap created. Okay, very, very important. So we had a couple right there. See that? Now, real quickly, I'm going to put in some day dividers real quick to kind of clean this up a little bit. So 1 second. All right, and another thing, this is our draw on liquidity. So this was actually my PT on this. Okay, so now on a 1-hour chart. But this was that draw on liquidity. It was actually my PT as well on this play, because remember, that was the low. That was the low prior to that move higher up into a premium marketplace. Okay, so that makes that the draw on liquidity. That was the low prior to moving up above 50% equilibrium. That makes that the draw. Okay, the draw isn't always, so I want to make this clear as well. The draw on liquidity doesn't mean PT. Okay, that's not the case. In this case, it was the PT, but there's many times where the draw on liquidity for me, it won't be my PT. It'll be like previous day's lows or low of day, and then you'll have that draw that's a little bit farther back. But it was with this specific scenario. Okay, so again, now we're back on a 15-minute. There's our draw. There was our fair value gap confirmation. Price did what? Price pulled back into a premium within that price range. See that? Even gave 61% key Fibonacci retracement. So we drew our Fibonacci from high of day to low of day. Okay, remember we got our fair value gap confirmation. We're rejecting off of a higher time frame level of resistance. We still have that draw on liquidity. What did price do? It came up, it surged up, it took out these buy stops. Uninformed traders, they're thinking what? They're thinking that's a breakout, or that is a shift in market structure. That is not a shift in market structure. Look at my cursor for anybody that's lost. I'm talking about these buy stops right here. Let me just remove this Fibonacci real quick. So we came up, we took out these buy stops into our fair value gap. There was many traders, I'm telling you, many traders yesterday that thought this was a shift in market structure, that this thing was going to pull back. It was going to find support off of this. They're looking at this like, hey, look, we got a bullish order block right here. Look at that. We're going to find support. We're going to rip up and we're going to take out the highs. Nope. This was strictly a stop run. Okay. For those of you that are wondering, okay. But how do we know if it's a stop run or a shift, Mike? How do we know that? I've made videos on that. So I want you to search my YouTube channel. Well, actually, heck, I'll link it in the video description below. I want you to watch after you watch this video, I want you to watch the video that I made on stop runs versus market structure shifts, the key difference. Okay, watch that video and you'll be able to identify it correctly. Okay, but this was not a key market structure shift. It was a stop run. It took out those buy stops, drew up into those fair value gaps, and then it crumbled, right? So we had this leg lower right here. I didn't get my profit target on this first leg lower, like literally basically to the pip. It just didn't feel me. And then we pulled back coming into a new day. I held overnight, which I really don't like doing, but I was still very, very bearish on this thing. It still looked very weak. And then right here, boom, we had this big move lower right here, this big strong move lower right here. And that was where my PT got hit. We took out these lows, we took out that draw right there, that daily low, and now we got an actual shift here. Now we got an actual or a possible shift. It could still be a stop run right here, what you're looking at right now, but this has a much better likelihood of being a real shift than that. Okay, big difference between this move right here and that move right there. Not only have we taken out that draw at this point, because right here we still have that draw on liquidity. We have purged that draw on liquidity. Again, let me say that. We have purged that draw on liquidity. And we broke high of day, which is a more significant liquidity pool. So this is a much more likely scenario. And I would be very careful shorting at this point, because I think this could retrace higher. Again, it may crumble. I may be wrong, but that's where I'm leaning towards at the moment on this Euro USD at the time that I'm making this video. But yeah, that was the reasoning on it. Just a really, really solid play, really good follow through on it. And yeah, that was the play.